Good afternoon. This is Todd Horwitz, coming to you from the floor of the CME Group in Chicago. And as we continue to track and follow 30-year bonds, we go, oops, I did it again. And of course, what we see here is the Fed has been boxed in a corner, hence their announcement. You cannot continue to try to manipulate rates. You cannot try to manipulate markets when markets need to be free on their own. I think that's one of the issues we're starting to see here. And I think what we're really seeing here is a panic from the Fed as to what they're trying to do. And I think what you're going to really see is because of the size of the fixed income market, and especially the 30-year bonds, these markets are going to start to get away from them. And of course, they're going to have to end up raising much quicker than they'd like to. I think that when you look at the overall picture, you can see that there's a whole bunch of panic in the eyes of the governors, because they can see that every past meeting they've made the same mistake. As they go back in history, each time we get involved with rates, they end up getting out at the wrong time. And that's where I see this panic coming in. And I'd look at this almost as, we talk about Custer's last stand. I think this is the last opportunity to really try to hold in on these rates. But what's happening is that the 30-year bond futures are getting clobbered, which obviously pushes rates higher. We're now at 4- and 5-year highs in rates, and they look like they're going to go a lot higher. These markets are starting to break down from the future side, which is going to continue to push rates higher. And I would say that we're still sellers at 150 if we can get back that high. Now we're obviously in the mid 148s, but if we can get back to that 150 level, that's where we'd like to sell. We're looking for a 145 and then actually down to 140 before we would expect to rally. But as you see, when markets start to trade and they get under extreme pressure, you can always expect some sort of a bounce, and that's where you want to look to be a seller. We are now 100% in a downtrend. The overall bull market in the 30-year bonds is over. So now we're getting into a bear market. So we want to be able to sell into the rally. So we'll look to sell at 150, and we'll see how that plays out. That's the way I see it. This is Todd Horwitz, coming from the floor of the CME Group in Chicago.